Fintech is the new buzzword in most financial services circles, especially post COVID setting in March 2020, where everything has moved to digital. MAS Financial has been doing some pretty interesting things of late. It has partnered with Cred and it has started co-lending with Bank of India. Now, we spoke with Mr. Kamlesh Gandhi on some of these aspects, and we also spoke to him with regard to the growth and the recovery, as well as with regard to slippages and any funding requirements for the company. Now, on the co-lending side with Bank of India, Mr. Gandhi says that the intent was to leverage the distribution network and the distribution strengths of MAS Financial with the balance sheet strength of Bank of India. And he believes that this synergy will augur very well for both entities. As regards their arrangement with Cred, he says that Cred allows for real-time data access, which is it allows MAS to access payments of its customers as well as monitor them to try and understand payment trends and to try and get a better hang of what kind of customers to reach out to. Now, this will also enable a digital reach. So again, the benefit for MAS Financial is two-pronged. One is the digital reach, as well as there is no or little compromise with regard to quality. Now, on recovery for MAS Financial, he believes that loan demand has pretty much normalized, with MSMEs recovering quite quickly and feeling the need to raise more debt, which he believes means that businesses are expecting to do quite well over the medium term. He also believes that the economy is recovering and normalizing quite fast on the ground. On the slippages, he believes that while the NPA stood at around 1.5 to 2% earlier, the current NPA range is around 2 to 2.5%, slightly on the higher side. He believes that this is largely due to there being several types of borrowers. One type of borrower which is unable to pay at the moment will be largely due to lower cash flows due to the second wave of COVID. And he believes that this particular borrower may take a few quarters to start repaying the debt. But he does not believe that the borrower will default on the loan, but is simply lagging on the loan. So he feels that while the demand currently is good, some laggards with regard to payments are occurring, which may unwind over the coming quarters. With regard to priorities for the company, he says that there is no real need for capital since the company already has a good tier 1 capital adequacy ratio of 25% plus, so well and safe, and believes that the priority is on quality and AUM growth to achieve both of these. He says that in FY22, the growth he expects the company to clock is in the range of 10 to 15% despite a poor Q1 performance due to the second wave of COVID. That's a quick take on how MAS Financial is dealing with digital trends, is dealing with partnerships, and is changing the way it is doing business.